Why is Series A funding due diligence so exhaustive for startups? Imagine walking into a room where every detail about your business is scrutinized. That's what happens during Series A funding due diligence. It might seem overwhelming, but it's all about making sure investors know exactly what they're getting into. This stage is the first big test for a startup to prove its worth beyond just a good idea. Investors want to see real proof of the business model, growth potential, and how well the company operates. They need to confirm the startup's valuation and spot any hidden risks before putting in serious money. During this process, investors review detailed financial records like income statements and balance sheets. They also examine legal documents, such as contracts and intellectual property rights. It's important because they want to verify the startup owns its technology and has no legal issues hanging over it. They also look at customer data and market positioning to see if the product fits the market and if there's room to grow. Founders must provide clear, audited financial reports and detailed growth metrics to prove their claims. This process also involves checking operational processes, like supply chains and team capabilities. Investors want to see if the startup can execute its plans and scale efficiently. They assess the competitive advantages, like patents or unique technology, to understand what sets the startup apart. All these checks help investors decide if the valuation is fair and if the risks are manageable. The reason for such thorough scrutiny is to reduce the chances of losing money later. It also helps in negotiating better investment terms, like equity share and valuation. For founders, knowing what investors will check means preparing organized documents and being transparent. Building trust early on can make the process smoother and faster. Networking with investors beforehand can also help, as it shows openness and readiness. In the end, this exhaustive review isn't just about risk. It's about making sure both sides are aligned and confident in the partnership. It's a vital step to secure the funding needed to grow and succeed. Being prepared for this level of detail can turn a stressful process into an opportunity to showcase your startup's strengths.